Hello, good day. I hope you are fine. Welcome to the third video of my recent series on technical analysis. In this video, I'm going to present some basic concepts about moving average. Moving average is one of the most popular and widely used technical indicators. It is incredibly simple to learn and apply. To make your learning relevant, I'm going to make use of real-world share prices as example. I have selected Top Glove, one of the highly volatile stock for the last 2 years in Malaysia. At the end of this learning session, it is hoped that students will be able to apply moving average to the real markets. Stay tuned and let's learn together. To enhance your learning experience with real-world example, I have selected Top Glove Corporation Berhad as a learning example for this video. This figure shows the latest share price movement of Top Glove from January 2019 to May 2021. This video is produced in May 2021. The sample consists of daily closing prices, covering a sample period of 2 years and 5 months. What is moving average? According to the definition of body, the moving average of a stock index is the average level of the index over a given interval of time. From the figure, the blue line represents the actual share price. The red line is the moving average. Moving average is used to smooth out price fluctuations. It filters out the noise, the daily up and down price movements. How can we make use of moving average? Moving average provides an overview of the general direction of an existing trend. Most importantly, it helps to determine the points of entry and exit, which means the buying and selling points. It gives signal of potential bullishness and bearishness. Moving average also shows the potential levels of support and resistance. Next, we are going to learn how to calculate moving average. The computation of a simple moving average is the sum of n number of prices divided by n. For instance, suppose that over a 5-day period, the 5-day moving average is calculated using the formula as follows. It would be helpful to use Excel spreadsheet to compute. Now, I'm going to explain to you mathematically how to calculate moving average. I'm using the real-world data of Top Glove Corporation Berhad. I name the days by number. For day 5, the 5-day moving average is calculated using closing prices for day 5 and the previous 4 days. It is the average of 5 closing prices. For day 6, we move to the share prices from day 2 to day 6 and compute the average. Happy trying! You are strongly encouraged to use Excel to compute moving average as it is very convenient. The Excel formula is equal AVERAGE, average. All you need to do is highlight the relevant input as shown in the slide. Although some financial database provides technical charts for moving average, sometimes it is good to know how to create the chart yourself. Once you master the skill, you may create chart for different sample period based on personal investment horizon, which may not be easily available in financial database. Now, we come to one of the most important questions: how to interpret the moving average for investment decision? The basic principle is simple. In this figure, there are two time series, share prices and moving average. The share prices are represented by Japanese candlesticks, while the moving average line is in white. Buy signal appears when the share prices cross the moving average line from below. This is known as positive crossover. A sell signal appears when the share prices cross the moving average line from above, which is a negative crossover. Moving average can be set to virtually any length of time. The shortest time span typically is 5 days, which is 1 week, as there are 5 trading days within a week. Other common lengths include 10, 20, 50, 60, 100, and 200-day moving average. The longer the period, the smoother the moving average is. From the figure, you can see that a 60-day moving average of top glove is smoother than a 20-day moving average. Generally speaking, the longer the time period you use, the less frequent the signals will be. If you are a relatively conservative trader, a 200-day moving average will be far better suited to you than a shorter time horizon. The short-term moving average can be compared with the long-term moving average to identify the golden cross and death cross. In the figure, the blue line represents long-term moving average, while the red line represents short-term moving average. Long-term moving average is smoother than the short-term moving average. Short-term moving average has more volatility or fluctuation. When a short-term moving average crosses a long-term moving average from below, it is called a golden cross buying signal. A golden cross is a bullish signal. When a short-term moving average crosses a long-term moving average from above, it is called a death cross selling signal. A death cross is a bearish signal. To generate lucrative opportunities, one must buy golden crosses and sell death crosses. Before I end this video, let's apply what we have just learned to analyze a real-world example. The figure shows the share prices, short-term moving average, and long-term moving average of Top Glove. When the share price increased in early January 2020, the buy signal, as indicated by the moving average lines, was unclear. This means little has the market participants predicted the sharp uptrend based on technical analysis. The bull run caught the market by surprise, as nobody has predicted the severity of the COVID-19 pandemic in early year 2020. The share price reached the peak of 960 on 19 October 2020. The death cross based on 20-day and 200-day moving average was recorded on 11 January 2021 at share price of RM 6.43. At the time I conduct this analysis, 17 May 2021, the graph shows that there is little upside potential in long term due to the divergence between short-term and long-term moving average. However, short-term volatility may continue to exist based on 20-day moving average. Finally, we have come to the end of this video. I hope you have learned some knowledge from this video. If you like this video, please click like, share or subscribe to my YouTube channel. Thank you. See you and goodbye.